7 assets that protect your money better than cash before it's too late. Have you ever wondered why some people save money for years, yet somehow end up feeling poorer? Imagine spending decades working hard, skipping vacations, avoiding unnecessary expenses, and carefully saving every dollar. You finally build a healthy bank balance, believing your financial future is secure. But here's the surprising truth. Money sitting in a traditional savings account doesn't always grow fast enough to keep up with inflation. As prices of food, housing, healthcare, and everyday essentials rise, the purchasing power of your cash slowly declines. The number in your account may stay the same, or even increase slightly, but what that money can actually buy becomes less over time. That's why many experienced investors don't rely on cash alone. Instead, they diversify into assets that have historically helped preserve wealth through changing economic conditions. Today, we're exploring 7 assets that have often performed better than holding large amounts of cash over the long term. Let's begin. Asset number 1: precious metals. For thousands of years, civilizations across the world have trusted precious metals as a store of value. Gold isn't just beautiful jewelry, it's considered by many investors to be a financial safety net. During periods of inflation, economic uncertainty, or market volatility, gold has often held its value better than cash. Silver offers similar benefits while also being used in electronics, solar panels, and industrial manufacturing. Some investors prefer buying physical gold or silver, while others choose gold ETFs or funds that track precious metal prices. Although prices can fluctuate, precious metals remain one of the oldest ways people attempt to protect purchasing power. Asset number 2: industrial commodities. The modern world runs on essential raw materials. Copper powers electrical systems, nickel and cobalt help build electric vehicle batteries, lithium fuels the clean energy revolution. As technology continues to expand, demand for these industrial commodities may continue growing. Instead of storing only cash, some investors gain exposure through mining companies, commodity-focused ETFs, or diversified resource funds. These investments can benefit from global industrial growth, although commodity prices can also be highly volatile. Asset number 3: safe haven currencies. Not every currency performs the same during uncertain times. Certain currencies, such as the Swiss franc, have historically been viewed as relatively stable during periods of global economic or political stress. Investors sometimes diversify a portion of their holdings into these currencies through currency ETFs or foreign exchange products. While no currency is risk-free, diversification across different currencies may help reduce dependence on a single economy. Asset number 4: government bonds. Government bonds may not sound exciting, but stability can be extremely valuable. When governments issue treasury bills or long-term bonds, investors lend money in exchange for regular interest payments. High-quality government securities have historically been considered among the lower-risk investments available, especially when issued by financially strong governments. Many investors use bonds to balance risk within their portfolios and generate predictable income over time. Asset number 5: value stocks. Not every successful investment comes from fast-growing technology companies. Many experienced investors focus on value stocks. These are established businesses with strong earnings, healthy balance sheets, consistent cash flow, and often regular dividend payments. Instead of chasing short-term excitement, value investors look for companies selling below what they believe is their true worth. Over long periods, these businesses have often delivered steady returns while rewarding shareholders with dividends. Dividend-focused mutual funds and ETFs also offer an easy way to invest across many value companies at once. Asset number 6, real estate. Real estate has long been considered one of the strongest long-term wealth-building assets. Unlike cash, property can potentially increase in value while also generating rental income. As inflation pushes construction costs and property prices higher, real estate has often served as a hedge against rising living expenses. You don't always need to buy an entire building. Many investors choose real estate investment trusts, commonly known as REITs, which allow people to invest in real estate through the stock market. This makes property investing more accessible without directly managing tenants or maintenance. Asset number 7, collectibles. Some assets don't produce income, yet they can become extremely valuable because they're rare. Luxury watches, vintage automobiles, fine artwork, rare coins, limited edition collectibles. Their value often depends on scarcity, condition, historical importance, and collector demand. However, collectibles require specialized knowledge, patience, and careful research. Most financial experts recommend treating collectibles as only a small part of a diversified investment portfolio rather than the foundation of one. Final thoughts. So, should you stop keeping money in the bank? Not at all. Cash still plays an essential role. Emergency funds, monthly expenses, and short-term financial goals all require readily available cash. The real lesson is balance. Relying entirely on cash may leave your purchasing power vulnerable over long periods if inflation consistently outpaces the interest you earn. Building wealth isn't about finding one perfect investment. It's about creating a diversified portfolio that spreads risk across different asset classes while matching your financial goals and risk tolerance. Remember, the wealthiest investors rarely depend on a single asset. They build systems that allow their money to work in different ways. Start learning, stay patient, invest consistently, and always do your own research or consult a qualified financial advisor before making any investment decisions. Your future financial freedom begins with the decisions you make today.